what about your own investments? What types of things are you currently an owner of or part owner of, and what are you looking to buy in the near future?
Yeah, so I've it's funny because I remember we talked about this last time we spoke. Have historically been more of a passive investor because I don't want to actively manage my assets. So all throughout when I started investing, I don't know, 15 years ago, a lot of it was passive, or actually all of it. I didn't buy my own real estate. And the reason is I just figured, let me leave it to the experts. And that worked out well for me. So it just kind of kept rolling. People I trusted, people I knew that were good at what they did. Now, as I get a little bit older, I'm starting to feel like I could take on, some of the investment, active management aspect of it, but I am going to be cautious, right? Because I think we talked about the intensive management of single family and just how that's not really necessarily worth it. Now, if you bought 15 years ago when prices were $50,000 or $100,000, sure, you could cash flow anything, even if you had a property manager. Me being as busy as I am, I'm not going to manage, and I'm dealing with it right now. I was dealing with it when I talked to you, and it's almost done, but it's just single family house. It's just sucking up all my time, and if I get someone else to do it, I lose money on it. So it's just an absolute pain. Can it make sense? Yeah, you get a good tenant, they don't bother you, you keep it cash flowing for a few years, everything's good. Where we're really trying to go right now, though, Capstar on the investment side is the commercial space, the land development space. We're absolutely crushing it on the land development deals right now. We got a full-time ace in there right now. We've teamed up with two brilliant people. So those are opportunities that we're looking at. And then, we would really like to get into some commercial space locally here in Tampa, buy it at a steep discount. And then from there, you can't lose. Just find someone who we trust that could operate it and just hold on to it forever. Right. That's the name of the game. But I'm not interested in single family, and there's nothing wrong with single family. Listen, hear me out. There's nothing wrong. It's the way so many people in this country have built wealth, right? And that's pretty much primarily how my dad got started. So I love single family. It's just not for me. That's what I'm saying.
Yeah. I agree with you. I think one consideration is who you are and where you are in your investing journey and in your business life, right? In your professional life, and what kind of time and resources and energy you have, and you got to allocate them properly in accordance with where you are as an investor. And then the other thing too is also the market, right? So different markets are different. And I think, for my personal market here in the Albany, New York area, is the best bread and butter for us is small multifamily. So it's the same thing here, where I don't think single family investments will cash flow unless you bought them a really long time ago, right? So if you bought anything in the last 10 years or 15 years, and it's going to be a single family rental for you, I'm not sure that you're going to cash flow. Maybe a little bit if you bought it kind of on the latter end of that or the older end of that. But if you bought anything more recently, I don't think it's going to cash flow. So we don't go after those things, those types of assets. What we do is anything between 3 units, 20 units is kind of our bread and butter in our area. That works really well because there are certain towns and cities right around the Albany area where the clientele, the tenants, are not necessarily, extremely poor, and they're not necessarily, really rich. And it's just kind of like this middle ground where the values, the purchase prices of these properties versus the rents that you get from this middle class tenant, it's like a sweet spot. It works really well. Yeah. And so that has been, our kind of target, but that's because it's how do they say it? When life gives you lemons, you make lemonade. So that's kind of what we do. You just look at the market. And I think that would be my recommendation to anyone watching and anyone's considering investing in real estate. You don't want to just look at or listen to what one of us says or another, investor from another podcast or a YouTube channel or whatever says about this is the best asset class or this is the best asset class. You have to look at first what are your capabilities and abilities are. What can you take on, and then also what does your market offer, and then go from there and figure out what's the sweet spot for you. And I think that's the most important takeaway, because there's no wrong way to invest in real estate if you're following this kind of mantra, because you're doing it with commercial, we're doing it with small multifamily. Other people I know around the country are probably doing with single family as well. Maybe somewhere in the Midwest where the home values haven't risen as much as some of the other more pricier markets, maybe you could still cash flow single family and it would make sense, and even if you did use a property manager. So I think, it's really important for people to understand that when we're talking about this.
Yeah, no, absolutely. It's all circumstantial. It's all dependent on your situation. I mean, if I were starting out today, yeah, then, I mean, I would probably be looking at some smaller single family, but and you're right. I mean, like, I'm in Tampa, right? So like the average home price is probably like $400,000.
Right.
How much rent are you really making? And the taxes on that might be, $4,000 or $5,000 a year.
Yep.
And the insurance down here is insane. And so what do you really, and your rents are probably, maybe $3,000 or $2,500. I mean, so where's the money in that? Right.
Yeah.
So it's tough. It's tough to cash flow single family, but everybody's situation is different. That's why you got to get creative, use some creative financing, some creative debt, seller financing, sub 2 stuff, whatever it is.